Welcome to Bullets, Pickler Wealth Advisors monthly market update, where each month I'll break down the major economic and political activities happening in our world. No frills, no jargon, just the facts. This month in November, our Artistry and Advising series highlights Salvador Dali, the Spanish surrealist best known for his dreamlike imagery and imaginative masterpieces. Did you know that Salvador Dali's 1937 painting, Sleep, captures the strange tension between rest and vulnerability? The massive dreamlike head, held up by fragile crutches, suggests how easily our sense of reality can drift when we surrender to sleep. Dali saw dreams as a doorway to the subconscious, a reminder that even in stillness, the mind continues to wander, imagine, and reshape the world its own mysterious way. Looking back to the month of October, yet again, another month of strong market gains. We saw the S&P 500, the NASDAQ, both hit record highs. Well, we saw better than expected third quarter corporate earnings, particularly companies like Amazon and Alphabet. We saw optimism surrounded by the Fed rate cut and the potential for future rate cuts. We also saw positive improvements in U.S.-China trade relations due to President Trump's trip to the APEC summit. We also saw a market that navigated mixed economic signals, as we saw slowing but steady labor growth with 4.3% unemployment and the ongoing government shutdown. And of course, we saw the AI rally continue. Now, as we move forward to the month of November, we're looking at a market that could be broadly bullish. It's driven by strong historical trends with cooling inflation and expectations of future Fed rate cuts. November is historically one of the strongest months. The S&P 500 has actually risen in 59% of the years in Novembers since 1927. We had a strong October. The S&P 500, the NASDAQ, and the Dow finished October with very strong gains. And when October ends positively during a presidential cycle, ladies and gentlemen, there's a 90% probability of a positive November. We also be watching for easing inflation. Falling U.S. rents and steady interest rates are positive signs for inflation, which could give more flexibility to the Fed for future rate cuts. And yes, we'll be watching resilient earnings and AI momentum. Corporate earnings for Q3 have been solid, especially in the tech stocks. Fueled by strong demand for AI, cloud computing, and semiconductor, tech stocks are still leading the way. We also are looking for risks and headwinds. In a slowing labor market, we've seen job growth has slowed, and weak job markets could actually dampen consumer confidence and spending during the holiday seasons. We'll also be watching about credit risk. Possible concerns about potential credit shocks, particularly in commercial real estate, last seen during the great financial crisis back in 2008-2009. High stock market valuations. The market is at all-time highs, folks, especially in technology areas. And of course, the government shutdown. Now, the longest government shutdown in American history, in part due to consumer confidence, government spending, and labor markets could be impacted by an ongoing shutdown. Salvador Dali once said, "Have no fear of perfection, you'll never reach it." His words remind us that true artistry and progress in any form isn't about chasing flawlessness, but about embracing the progress in the process of discovery, experimentation, and growth along the way. Remember, ladies and gentlemen, at Pickler Wealth Advisors, it's our family delivering solutions for your family. This is our passion. This is our purpose. Together we plan. Until next time, I'm David Pickler, and these are the Market Bullets.